Welcome to your Mortgage Insider Update for March 18th. The Fed is meeting this week, concluding on Wednesday. They'll come out with their expected announcement to kick the can down the road a little further as far as interest rates go. So, no major changes expected there. A lot of discussion will come up over the first quarter GDP coming in under negative 2%, 2.1%. There's some adjustments and things over time that'll play out throughout the year. So not necessarily are we on the path to a recession, but definitely going to be part of the Fed's discussion this next week, as well as employment or unemployment rates seem to be not looking as strong as they had been at the end of last year. And we're going to take a look at the charts as things are kind of just treading water, preparing for the Fed. The 10-year Treasury up 1 basis point, 4.3%. Like I said, pretty flat. Mortgage-backed securities exactly flat in anticipation of bigger news, hopefully tomorrow, as the Fed does their announcement. We're actually hoping that they'll talk a little bit about the runoff of their balance sheet. So with the balance sheet, the Federal Reserve holds a large amount of Treasury assets as well as mortgage-backed securities. And what they've been allowing is for, as time goes on, a 10-year Treasury, like we're looking at right now, would run off after if they bought a 10-year Treasury 10 years ago and it comes up this month. They're taking their money back. They're not repurchasing the same amount of 10-year treasuries as they owned. So basically, they're letting some of it run off. There has been some discussion to start to slow that down and maintain a current level on their reserve assets. And if they did that, that could really push interest rates down for treasuries. Specifically, treasuries, we want those to come down as far as the interest rate. We want their price to go up, like on the mortgage-backed securities. So we'll keep an ear out for that on Wednesday. Right now, like I said, treading water here. We've kind of stayed in this range between the 200-day and this Fibonacci retracement line, only breaking above it real briefly here at the beginning of March, which was a good, exciting time. It is starting to bring the curve down as far as the averages, but now we're starting to sandwich from between what's the 25-day average and the 200-day average, and it could take some time and some kind words from the Fed to break below this. To look at the mortgage-backed securities, just briefly, those, like I said, are flat today, and they are very similar where they're in a range, pretty tight range in anticipation of the words from the Federal Reserve. Of course, we won't know exactly what they said other than in their statements in the press conference this Wednesday until they release the minutes. But it could be some interesting discussions in a few weeks when those minutes come out. That could bode well for mortgage-backed security prices after they've kind of peaked here back at the beginning of the March. We're hoping for some movement back higher, and higher prices would bring lower rates to the consumer. So we'll keep an eye on it this week. Come back next week with an update for what is the words from the Federal Reserve. Make it a great one.